SGOV is a great alternative to money market sweep options at Vanguard, Fidelity, and Schwab. We're going to take a look at a table showing the expense ratio for a number of the largest mutual funds, money market mutual funds, versus SGOV and the current distribution yield. Then I'm going to show you what happens when you pay taxes at the state level on a money market mutual fund. We're going to look at an example comparing Vanguard Federal Money Market Fund, one of the largest money market funds out there, against SGOV, and we're going to use state taxes in this example so you can see the impact of paying state taxes, which you have to pay on your ordinary dividend on the Vanguard Federal Money Market Fund versus not paying state taxes on the dividends on SGOV. 100% of the dividend on SGOV is state income tax free. So if you own money market in a non-retirement account and you live in a state which has an income tax, which is most states, a portion of your dividend on the money market is going to be taxable at the state level. This reduces the yield that you receive on the fund in comparison to owning SGOV, which is 100% state income tax free. Here is a helpful table to compare SGOV against the largest money market mutual funds at Fidelity, Vanguard, and Schwab. We're comparing on three variables: cost, this is the annual expense ratio, the current distribution yield, and whether or not we pay taxes at the state level on a portion of the dividend. So with SGOV, we're very cheap, 8 basis points. Much cheaper than Fidelity SPAXX at 0.42 or Schwab SWGXX at 0.44. On a yield basis, SGOV is ahead of some of these money markets, but not all. We can see that Vanguard Federal Money Market VMFXX, which only costs 0.11, it's pretty cheap, has a yield that is slightly higher than SGOV at 4.76. But wait, you pay taxes on a portion, it's about 40% of the dividend on VMFXX. On SGOV, you don't pay any state income tax. Let me clarify. The dividend on all of these money market mutual funds will be reported as an ordinary dividend, and then a portion of that dividend is going to be taxable at the state level, provided you own it in a non-retirement account and you live in a state with an income tax. Now, you need to do some homework to determine what amount of your ordinary dividend is going to be taxable. I'm going to show you how to do that. But if you want to simplify your life, you just buy SGOV because 100% of the dividend on SGOV is state income tax free. If you own one of the Vanguard funds, for example, you need to find this document by Vanguard, U.S. Government Obligations Income Information, for all of their funds. This will tell you the percentage of the fund's total ordinary dividend that is derived from U.S. government obligations, meaning it will tell you what percentage of your money market fund is going to be state income tax free. Our example is going to compare SGOV against VMFXX, the Vanguard Federal Money Market Fund. You can see that approximately 60% of the fund's ordinary dividend in 2024 came from U.S. government securities. What that means is that 40% of your dividend was taxable at the state level, and that reduces your net yield on this money market fund in comparison to SGOV. Here's a direct comparison for Vanguard's Federal Money Market Fund, VMFXX, against SGOV for $1 million investment at the current distribution rates. Even though VMFXX is higher at 4.76 versus 4.7, when you don't have to pay state income tax, you end up ahead with SGOV. In my example, we are assuming that you live in a state with a 6% tax rate. We know that 40%, 40.13 to be exact, of the ordinary dividend from VMFXX is going to be taxable at the state level. So if you put $1 million in VMFXX and you receive the current yield, or current distribution yield rather, of 4.76, you would get $47,600 over the next 12 months if everything stayed at the same rate. 40.13% was in repos, meaning that they're taxable, and $19,102 would be taxable at the state level. I'm assuming a 6% tax rate for simplicity's sake at the state level. That means you'll owe $1,146 in state income tax. So after we account for state income taxes, you are behind on VMFXX, even though the top line yield is higher. The federal taxes, of course, are going to be equal on both sides, but the state income tax free status of SGOV puts it ahead. If you have questions about your investments, please give my office a call. We would be happy to give you a free second opinion on your portfolio. If you like this content, please share it with your friends. I hope this video was helpful. I hope it gets you thinking, helps you better analyze your investments, and overall improve your family's financial plan.